Fibonacci retracements and extensions. So Fibonacci, so it's something I really like. I'm really passionate about Fibonacci. So basically, Fibonacci was a mathematician, and he discovered what we call the golden ratio. So you might have seen it maybe like at school or something. It's used a lot in mathematics, music, art, trading, so many things. And it's basically that golden square, golden ratio. And so I really recommend you just to go and have a look on YouTube or so about the history and where we can see Fibonacci. So we could see it's a lot in trading and in the human body, haircuts. So Fibonacci really interesting, and we will use it a lot in our trading. So basically, it's a sequence by putting 1, 1 plus 1, 1 plus 2 plus 1, all of that, and all that makes sequences. And that will allow us to put Fibonacci retracements and extensions. So basically, Fibonacci retracements will be in order to enter trades, specifically in trends, and Fibonacci extensions will be to basically set targets for our trades. So the key levels in Fibonacci are what we call the kill zone. So first of all, let's do the same. So you've got that icon and you've got all the fibs here. So we call it fib. So it's fib retracement, that's the one we will use, and the fib extension. All of these, I've used them and they don't work that much for my style of trading, and I prefer to keep it simple. So put these two into your favorites, as I did, one here and the extension here. So fib retracement, you'll see it looks like this. That's when you first get TradingView and don't modify anything. So you basically see click and it will make this ugly thing. So let's change it first of all. So you will take off the trend line, which is this. You don't want that. Change the trend line. We'll take off the 0, take off the 1, all of these as well. Right? And we'll keep, basically we'll keep these, but only select these 3. The colors I put are red, this one is green, this one is purple. I'm just showing you how I do it. Then I don't like levels, no prices, but percentage. I like it on the right, labels on the right. Wait, no. Yep, the levels, percent on the right, no background. And no, sorry, that's the green and that's the red. Then this one I'll put it orange, and this one I put it blue. Right, so you can see it's much cleaner. So that's how we'll use it. So Fibonacci retracements. It's all about, so basically the market moves in waves. So you will see like in a downtrend, market moves down, then there's a correction up, then down, another correction, down. You can basically see it like that. Correction, down, correction, down, correction, down, correction, and then it goes the other way. Okay? And so basically that Fibonacci levels, will basically tell us, let's say that's the move down, where the retracement, the correction, should go. So around these levels or something. So the correction should do something like this. Alright? So that's how we use Fibonacci. So let's see how we use them. So first of all, you need to identify a trend or simply some specific moves. Like you can see this. Alright? I'm on the 1 hour chart on Aussie Yen. I take the Fibonacci. And so basically when it's in a downtrend, you will select the top side to go down. If it's a bullish one, you go from the bottom to the top. All right, that really changes. So keep in mind when it's bearish, go from top to down. Bullish, but always from the left to the right. That's what I mean. Now to make it cleaner, I don't usually take the top, like literally the top, but I will take this and go to the level of the top. You can see I'm at the same level, but simply to make it cleaner, not to have big lines everywhere. And same for here, at the bottom of here. So basically that's my fib. And what can we see? We can see that the levels 38.2%. So that means that this move has been corrected 38.2% of that move. That's 50% of that move. So that's half of this. And that's 61.8. So this is called the kill zone. And basically, Fibonacci retracements says that very often the market will go down, retrace, and if it's supposed to go back down, it will usually reverse in that zone, which is our Fibonacci retracement zone. You can see around the 50 and the 61.8, 38.2. All right, so yeah. Now you can see Fibonacci. I really like it. Use it a lot. Let's look at it just like that, for instance. All right, take that level, so that swing down, retracement, bang on the 50% retracement. All right, so this one was at that resistance, as you can see. Now let's look that swing. Bam, 50%, bang on. Now this one, 61%, bang on. This one, bang in the middle as well. You can see consolidation, then goes back down. This one probably did not complete. Actually did. You see, rejected by the 38.2. And probably about the same here. Oh. Got it the wrong way. Here we go. 50% as well. And you can see then it went back up, so Fibonacci won't work in that case. But so let's look at that downtrend. You see how many trade opportunities you had by using Fibonacci, okay? You had one great entry. This one, well, not so much because it went up to resistance. You had this one, this one, this one, this one, and this one. So a great tool. Obviously, you can't use it by itself. That's why we'll use candlesticks, because that's a way to complement our analysis, remember. So this is Fibonacci retracements. And what we will basically want to see in Fibonacci retracement is when price gets to these 50% and 61.8%. Like this, I wouldn't really trade it because there's, you see, like if I traded this, I would have probably put my stop loss above the 61.8 just to be sure. So my risk to reward, we'll see all about that, wouldn't be that great. So yeah, that's Fibonacci retracements. Really important. You'll see we will use them a lot in our trading. Now, Fibonacci extensions is, show you. So this tool, basically, so wait, yep. All right, so that's my settings for the Fibonacci extension. So you can see I've got all, well, I usually put all in this turquoise color and this to make it cleaner. All right, and you can also do this one. It depends basically on the move. You'll see with no background. Yep. So Fibonacci extension. So let's take that move. Let's say you've found that nice Fibonacci retracement to enter a trade short. Now, what you're going to do is go from the swing to the low, just like the Fibonacci retracement. But now that the retracement has happened, well, you select that retracement. So obviously, we'll go a bit far for the Fibonacci to go far. You can see it moves. So this way. And there, what you can see is that the Fibonacci retracement is to enter, and this is basically our target. All right. So it went up to these fib levels and down to this fib extension level. See, that's why I don't usually put the 1.6 because it's quite far. So it depends on the trade. You'll see. So this, perfect. Now, look at this one. Bam. Here, you can see, nice one as well. And even the big moves, so let's take this to here, to there. This will probably coincide with the 1.6. Yes, it was here. Next one I think is really, yeah, it's really far. So yeah, And so basically how that works is you can see, getting a bit lost with all these numbers. So yeah, when you go down to the move and up, if it's been to the 61.8, you will see the bottom of it will be 61.8. But yeah, so basically fib extensions are levels at which we target our trades. So yeah, and basically, so fib retracements and extensions and all of that are sort of projected support and resistance levels where prices might move. So yeah, if I was going to trade these fib movements, you could see they're rejected by the 50%, then went back down. I could have entered that trade, maybe put my stop loss above the 61.8, all right, just to make sure, and then use the fib extension to target. To target like the 70% one with a nice risk to reward ratio and bang on profit. All right. So this is Fibonacci retracement. I'm really passionate about it. Sadly, I can't talk much, but yeah, please go even on YouTube. Just look at the history of Fibonacci and things. And really great tool. I use it a lot in my trading, and it's part of my conferences that we'll see in the next section.